This is why I read filings. Okay, so I went over this one on, I believe it was Thursday. No, it couldn't have been Thursday because it came out. Yeah, it was Thursday because it was published Friday. But anyways, I went over this briefly, and I went into this one and read it again. Read it a little bit more with a fine-tooth comb. And this is why I read filings, because get this shit. What are we playing right now in our group? Chinese ADRs. Well, look at this proposed rule. Proposed Rule 4120B1BVI gives the exchange, and this is NASDAQ, discretion to halt trading in an American Depository Receipt, otherwise known as ADR, or other NASDAQ-listed security when the foreign securities exchange or market listing the security underlying the ADR or the NASDAQ-listed security or the regulatory authority overseeing such foreign securities exchange or market institutes a halt for regulatory reasons. So basically it's saying that NASDAQ has the discretion to halt trading in ADRs when the foreign exchange calls for a regulatory halt. Now, this is where it gets interesting. The exchange is deleting text that presently exists in the rule covering ADR and other NASDAQ-listed security halts at Rule 4120A4, which references national securities exchanges instituting a halt for regulatory reasons, because under the proposed new rules, a regulatory halt will be issued by the primary listing exchange. If the other national securities exchange is the primary listing exchange and declares a regulatory halt, the security will be subject to a halt by the exchange. Thus, such a halt on the exchange will be mandatory. The proposed amended rule will consider only actions taken by a foreign exchange that halts the NASDAQ-listed security or security underlying an ADR on its market for regulatory reasons. And then they put in parentheses, foreign exchanges do not fall within the definition of a primary listing market, and therefore their regulatory halts do not fall within the amended NASDAQ UTP plan's definition of regulatory halts. The exchange will then assess the regulatory reasons underlying the halt on the foreign market and possibly initiate a regulatory halt. So basically, that's them telling you they're not going to be halting ADRs because, remember, they just changed definitions. They just changed the definition of a primary listing market to mean basically the primary listing market is going to be the one that's held or who has listed the underlying ADR the longest. In this case, it would be Hang Seng and the Shenzhen. So now the discretion falls within them, but since they altered the definition of this, foreign exchanges do not fall within the definition of a primary listing market, despite them being the ones that listed it the longest. And now the regulatory halts do not fall within the amended NASDAQ UTP plan's definition of regulatory halts. So they're telling you, they've been telling you this whole time, and it's all in the filings. And this filing's title, by the way, was Self-Regulatory Organizations, NASDAQ Stock Market LLC, Notice of Filing of Proposed Rule Change to Modify Equity 4, Section 4120, to add categories of regulatory and operational halts, to reorganize the remaining text of the rule, and to make conforming changes to related rules. Get jacked, everyone. It's coming.